Hi there, welcome to Kneppy Invest. One of the main reasons I started doing this channel was to share ideas with other investors. And I believe sharing ideas is one of the best ways we can grow as human beings and as investors. But when it comes to the company I'll be featuring in today's video, I don't think I really need to share BHP with you because more than likely every single person who watches this video has heard of BHP, and even those Australians who don't invest at all more than likely have heard of this company before. This is one of the, if not the biggest company in Australia at this point in time. The market cap of BHP is approaching $200 billion. So it is within realms of being called one of the biggest companies in the world. So I thought, because this is a big company, one of the biggest companies on the ASX, one of the biggest mining companies in the world, if not the biggest mining company in the world, I have no idea. I thought it'd be a good idea to have a look at BHP's financial year 22 results. And there are some really interesting aspects to their results and also to the current valuation of this company. I plan on continuing these financial year 22 result videos for a while yet, and I am planning, at least 5 videos in advance, and these are the next 5 financial year 22 videos I will do, including Bapcor, Pro Medicus, Reliance Worldwide Corporation, Prime Financial Group, and even though most people have heard of BHP, I probably would say the vast majority of ASX investors have never heard of Prime Financial Group and Super Retail Group. If you do have a suggestion on a company you'd like me to feature in a video, preferably a company that is profitable and is growing, just leave your suggestion in the comment section of this video, and I'll see what I can do. Now to the quality of BHP, and this is a really first step I usually make when I am researching a company. I want to assign a quality, either high or low, to all companies because I treat high quality companies a little bit differently. In fact, a lot differently to low quality companies. Now, if you know anything about me at all, you will know that I typically treat mining companies as low quality simply because they are price takers. For instance, BHP sells a lot of iron ore, but how much they sell their iron ore for is not up to BHP, it's up to market dynamics, supply and demand. Now, one of the things about BHP that I don't like necessarily is they are possibly a little bit too concentrated towards iron ore, but they're not as concentrated as, say, Rio or Fortescue. But BHP share price and the valuation will be highly correlated to the price of iron ore. And in fact, we saw that in 2016 when iron ore prices collapsed. The same thing happened to BHP share price. In fact, the BHP share price fell all the way down to $12, and that would have been an ideal time to take a position in this company for the long term. But there was a lot of fear in the market at that point in time, and that's why the share price of this company fell to those levels. And in fact, if you look at the financial state of the company back then in 2016, they were actually loss making. And if you looked at the valuation metrics, it would have seemed like BHP was overvalued back in 2016, even though the share price was down to multi-year low. So BHP, in my opinion, is a low quality company, but in terms of mining companies, it's probably one of the, if not the highest quality company, not only on the ASX, but also in the world. And one of the ways you can determine a quality of a company is just look at the long-term chart. And in fact, this is the 30-year BHP chart. And even though I probably say that BHP is a low quality company, I would put it at the high end because when you do look at the chart, the share price has gone from the bottom left to the top right. And that's exactly what you want if you are a long-term holder of a company. But there have been times during the last 30 years, particularly back in 2015 and 16, when iron ore prices fell something like $30 a ton, whatever it was really low. That's when the share price of BHP really suffered. In fact, it fell all the way down to just above $12, and that would have been an ideal time to buy. But then iron ore prices recovered, and the share price of BHP took off, and the share price has tripled since then, increasing from about $13 to a current share price of $39. So when it comes to BHP and a lot of other mining companies, it's all about the cycle of the underlying commodity they are mining. And for BHP, that is iron ore. So you want to be looking at the iron ore prices And the time to buy BHP, or the best time to buy BHP, is at the bottom of the cycle, like in 2016. But we'll have a look at the valuation metrics later in the video, and it's sort of counterintuitive that when you buy a BHP is when the value or the valuation metrics seem pretty high, and the time not to buy BHP is when the valuation metrics seem pretty low. And right now they do seem pretty low, but we'll discuss that later in the video. Now to the financial year 22 results for the company. Now, I did have to update this recently, so I'm just recording this video just after trading has finished on the 24th. Share price of BHP did rise another $1 today. Didn't close at $39.07. That was the share price just before closing. But at a share price of $39, the market cap of this company is $198 billion. Revenue of $92.6 billion in financial year 22. Profit of $44.9 million. Now, all these numbers are in Australian dollars. They actually report in American dollars. So I did have to convert some of these. In fact, did I convert it or did I use an investing site? Might have used an investing site who had already converted the numbers to Australian dollars. So it's very important to get your currency right. I have made this mistake in the past, but these are Australian dollars, even though the company reports in American dollars. So profit, $44.9 billion Australian. Operating cash flow, $46.7 billion. And free cash flow, $38.2 billion. Now, just compare the profit here, $44.9 billion to the market, $198 billion. So straight away, you can see that the P ratio of BHP is really low. So it's approaching about 4 or just above 4. And that would seem like BHP is completely, totally undervalued right now. And that is a trap you can fall in when you do look at mining companies. And it's all around the commodity price, and it's all around the forward expectations of the market. So that is one reason why I would not consider mining companies to be high quality companies, because when it comes to high quality companies, it is all about valuation. And for a high quality company, I would be going all in. I'll be selling my house if the PE ratio of that company was just above 4. And then you could argue that a company with a PE ratio of 4 is either really good value or a value trap. But then I would counter argue, and not many high quality companies would be value trap propositions. Now onto this particular slide, which is the revenue history for BHP. We've also provided some operating margins on this going back to 2012. The first thing you'll notice is revenue has fallen from 2012 from 70.5 billion to 65.1 billion. Now, this is taken from Ticker, and these numbers are in American dollars because Ticker didn't do any adjustments from American dollars to Australian dollars. I think there was another site I used, could have been Guru Focus, who did that adjustment. So I was able to show you BHP numbers in Australian dollars in the previous slide, but these are American dollars. But revenue has fallen for BHP in the past 10 years, but not on a revenue per share basis. So if you do look at revenue per share, revenue has increased at 3.2% per year over the past 10 years. Now, the reason you look at revenue per share is because some companies might be doing share buybacks, some companies might be doing capital raisings, and some companies might increase their shares on issue by 3-fold or 4-fold over a 10-year period. So it's always very handy to look at revenue per share growth, not just look at revenue. But the main thing here is you can see a lot of lumpiness with revenue. So revenue hasn't been going up in a straight line, and that is because, of course, BHP is a miner, and their revenue is going to be highly dependent on the price of iron ore, because this company is, I'd say they are concentrated in iron ore. We'll have a talk about that later. But you can see the low point in revenue for BHP was in 2016, and that was a low point of iron ore. And we have seen iron ore prices climb regularly since 2016. That's why BHP revenue has climbed consistently since then. In fact, over the last 5 years, revenue for BHP has grown at 13.6% per year, and over the last 3 years at 14.2% per year. The other thing you'll notice is operating margins have increased over the past 5 to 7 years as well. And that is a good thing for this company. However, I think there probably would be a limit to how high operating margins could get for BHP, and possibly we have seen that in the last 2 years because operating margins have reached about 50 to 51%, and over the past 2 years, it's just gone sideways. So it'd be very interesting to see what happens with operating margins over the next few years, just to see if they can continue to increase those margins. This particular slide found on page 11 of the financial results presentation that the company released on the 16th of August 2022 was quite useful for me, because even though I knew BHP was reliant on iron ore, I didn't really know what other commodities they were mining. So this is the page you want to know, and you also understand how reliant they are on iron ore. So they've provided all the commodities they are mining and the EBITDA and also some unit costs. But I'm just going to focus on the EBITDA. So for iron ore, EBITDA in the last financial year, 21.7 billion. And then if you add up the EBITDA for copper, metallurgical coal, nickel, and energy coal, it does not equal iron ore EBITDA. So again, BHP is highly reliant on iron ore. I won't say they are too concentrated in iron ore, but I would like to see a little bit more diversification, particularly towards copper, nickel, that area. I was a little bit surprised they're still in metallurgical coal and energy coal, and they did realize $7.7 billion of EBITDA with metallurgical coal and $1.8 billion in energy coal. And it looks like they are getting into potash, but there is no operations right now. But they have been awarded $1.7 billion in contracts so far. Potash, I believe, is used as fertilizer, that sort of thing. So the main thing here is, and the thing I took away from this, is that BHP is fairly concentrated in iron ore, and the BHP valuation and share price is going to be highly correlated to iron ore prices. The next two slides I have just taken straight from BHP's financial results presentation on the 16th of August. Now, the previous slide was the 11th page of that presentation. This is the 12th page, and the next slide is the 13th page. So there was 3 slides in a row that I found quite fascinating. This particular slide focused on capital expenditure and expected capital expenditure in the next few years. So capital expenditure is expected to increase for BHP. Now, they've broken it down into maintenance capital expenditure and growth capital expenditure. And I love when companies do that, because it's very important to distinguish between maintenance capital expenditure and growth capital expenditure. Now, I won't say anything else about that, but they have broken it down on the left-hand side into those different areas. But on the right-hand side, they did mention a couple of very interesting points here, particularly in regard to copper and nickel. So exploration capital focused on copper and nickel. And then in the second point, major capital in future-facing commodities includes Jansen Stage 1 execution and options in copper and nickel. Now, I am actually very bullish on the future of copper and nickel. Even though copper prices have been falling recently, I think this is leading up to actually boom in copper prices in, say, a few years, particularly when this fear of recession subsides. And with the fall in copper prices, I think the place to be will be in those companies that are mining copper, because there is a significant undersupply of copper right now, and there hasn't been a lot of investment into bringing more copper mines online. So I am looking really hard at copper producing companies, and it seems like BHP might be on the same line or same line of thinking as I am, focusing their exploration on copper and nickel. And one of the reasons I am bullish on copper and nickel is because of the EV. So EVs need a lot of copper and nickel, particularly compared to normal cars. What do you call them? Normal cars, combustion cars, what do you call them? And I'm not sure the market understands that just yet. So the market, and the market is all-encompassing, is all about lithium right now because of lithium batteries. But the market doesn't quite understand at this point in time how much copper and nickel we're going to need for electric vehicles in the future. And because copper prices have fallen, no mining company is interested in copper right now, or so it seems, except it seems maybe BHP. So I am bullish on copper and nickel. And it's just interesting to see that BHP is thinking along those same lines. So I'm going to keep a close eye on BHP and see how these exploration capital expenditure things go in the future. So the previous slide was all about capital expenditure. This particular slide is about capital allocation. And in my opinion, for companies like BHP, who bring in a lot of cash due to their operations, capital allocation decisions are one of the most important decisions management have to make. So I really appreciate when companies include these sort of slides, because I want to know what the company is thinking. So they just mentioned here, continued capital allocation discipline. So if you don't know what capital allocation is, it's all about what the company does with the cash flow the company is bringing in with their operations. So if a company has, say, $100 million of free cash flow, what do they do with $100 million? They can give that back as dividends to the shareholders, do a share buyback, research and development, acquisitions, or for mining companies, it could be exploration and that sort of thing. And they've really gone hard at this in this particular slide. So financial year 22, net operating cash flow, 29.3 billion. Maintenance capital, 2.8 billion, strong balance sheet. Minimum 50% payout ratio, dividend, 10.5 billion. And then they have excess cash of 13.4 billion. So what do they do with that excess cash after the dividend? So they're already talking about dividend. So balance sheet, 4.4 billion. So just improving the balance sheet. Additional dividends of 7.4 billion. Zero buybacks. So they're not doing any buybacks. Organic development, 3.3 billion. And acquisitions or divestments. In fact, they made divestments, no acquisitions. So I really like that a company is doing this and talking about this and showing their investors and the market what they're thinking about. So congratulations to BHP management to have this particular slide in their presentation. Now to the valuation metrics for BHP. And this is one area that might trip up some investors, because when you see a P ratio of 4.4, you might think BHP is completely undervalued. Price to sales ratio 2.1. Price to operating cash flow very low as well, 4.2. Also did a reverse DCF. So what would the growth have to be for BHP to justify their current valuation? And we get a number of minus 8%. Now, this is telling us that the market doesn't expect similar results as what we saw in financial year 22 for BHP in the next few years, even maybe the next 5 to 10 years. So financial year 22 was one of the best years that BHP could expect. And the next few years won't be anywhere near as good. In fact, you might see the profit of this company fall in half in financial year 23. We have seen iron ore prices pull back a fair bit in the past, say, 6 to 9 months. So there is potential that, yeah, profit might halve. And if profit halves, that means the P ratio of this company is back up to 8.8. If profit decreases by 67%, that means the P ratio of this company would increase to over 10. So be aware when you look at valuation metrics, don't get caught by these low valuation. In fact, you could argue the time not to buy BHP, the time not to buy mining companies is when the valuation metrics seem really low. This could be a value trap moving forward for BHP. Now, I'm going to go quickly through this slide. This is just looking at the profit and operating cash flow. If we go back to 2016, the company, or BHP, was loss-making by 6.4 billion. So remember, in 2016, that was the low in the share price. And when BHP released their financial year results in 2016, and they were loss-making by 6.4 billion, I can imagine what the media made of that. It would have been on front page of all the, maybe not front page of all the newspapers, but it would have been headline news that BHP lost $6.4 billion, and that could have caused a little bit of fear among a lot of investors. But that was the best time to buy BHP, because that was at the bottom of the iron ore cycle. And you can just see profits have climbed since then, increasing from $11.3 billion in 2021 to $30.9 billion in the previous year. And operating cash flow have also increased from a low of $10.6 billion in 2016 to $32.2 billion in the most previous year. Now, I may have already mentioned that possibly the time to buy BHP or other mining companies is when the valuation metrics seem really high, and the times to sell potentially is when the valuation metrics seem really low. And we can test this with BHP by looking at the P ratio of the company going back to 2012. I've also included the share price here. So we have the share price low back in 2016. Now, you see the P ratio in 2016 as 0 because this company was loss-making that year. So that's why the PE ratio was all the way down there. But on either side of 2016, so 2015 and 2017, the price or the PE ratio seemed really high. So in 2015, the PE ratio was between about 40 and 60. So you would not buy BHP when the PE ratio was between 40 and 60. But in 2017, the PE ratio was around 35. That seems really high for a company like BHP. But don't forget, the time to buy this company would have been back in 2016 when this company seemed like it was really expensive if you just focused on the valuation metrics. In fact, the PE ratio would have been NA, would have been negative, that sort of thing. But right now, the PE ratio of this company is less than 5. And over the past 10 years, we have not seen the PE ratio of this company less than 5. In fact, if we go back to 2013-14, the PE ratio of BHP fell below 10 for a period of time, and that was just before we started to see the share price fall. And we have seen the PE ratio of BHP falling over the past, say, 3 to 4 years. And right now, it's had historical lows for this company. So the market does not expect this company to perform well in the next year. That's why the PE ratio is so low. And with falling iron ore prices, more than likely, the profit for this company will fall significantly from what they reported in financial year 22. Because I consider BHP to be a low quality company, the only reason or only way I'll take a position in BHP is if I do see the share price in an uptrend and there's some positive sentiment behind the company. And right now, that is not true for BHP. Share price is in a downtrend, falling from about $48 back in June to a current share price of around $39. Now, in saying that, there's a nice little support level at around $36. We have seen the share price reach $36 3 times in the past 3 or 4 months, and then we've seen the share price bounce off. But the reason why the share price of BHP is in a downtrend is because iron ore prices are in a downtrend as well. So you could just look at iron ore prices, and when iron ore prices start to turn up, that's the time you might think about taking a position in BHP, Rio Tinto, Fortescue, or the myriad of other iron ore players on the ASX. And maybe the reason you might pick BHP over those other companies is because there's a little bit more diversification in BHP, and I'm more interested, highly interested, in what they're going to do in nickel and copper over the next 5 years. I would love if BHP really goes gung-ho into copper and nickel. So I'll be looking and waiting to see any news flow along those lines for BHP over the next few years. Anyway, that's really all I have for this video, looking at BHP's financial year 22 results. If you have different opinions than my own, if you have some thoughts, some questions, leave those in the comments section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.